Hi, the topic I am going to cover today is moratorium announced by RBI on loans availed by the borrowers and its impact on the common public. How it have benefited society, industry, common man, what are its advantages and disadvantages, the present position, etc. You all know that it is a very tough time we are all going on. The extensive spread of COVID-19 outbreak has severely impacted almost the whole world and triggered significant risks to the overall global economic outlook. The lockdowns declared by the governments, state governments and central governments have led to widespread job losses and economic hardships. Major companies in India have temporarily suspended its operations or significantly reduced its operations. Startups have been impacted as funding has fallen. FMCG companies have significantly reduced operations and are focusing on essential goods. To address these issues, the Government of India has announced a variety of measures to tackle the situation, from the initial food security and extra funds for healthcare to sector-related incentives and tax deadline extensions. On 26 March 2020, a number of economic relief measures for the poor were announced. On the very next day, RBI also announced a number of measures which would make available more liquidity to the country's financial system. You all know that on 12th May 2020, Prime Minister of India has announced an overall economic package, Atmanirbhar Abhiyan. Then what are the features or implications of this moratorium? Normally there will be two types of loans, term loans and working capital loans in banks. So the moratorium benefits or implications or features are different for these two types of loans. First we will discuss on term loans. In the case of term loans, the payments due including interest and installments, that is EMI, during March 1st, 2020 to August 31st, 2020 will not be demanded by the banks. This is one of the features. The tenor of all such term loans will be extended further by 6 months because there is a repayment holiday. So it will automatically extended. Then what will happen to interest? Interest debited in term loans during this moratorium period will be capitalized and added to the principal amount. The bank will definitely charge interest. It will automatically add to the principal component and the interest will be computed on the principal plus interest on this moratorium period. So it will have an interest on interest impact on the loans. In the case of working capital loans, interest debited during the period from March 2020 to August 2020 to be deferred. The interest debited during this period will be given as ad hoc to the borrower. At the end of the moratorium period, the interest deferred will be converted as a funded interest term loan. This deferring means what will happen? In this case, normally you all know that the working capital will have a limit. When this interest is accumulated to the outstanding amount, the outstanding limit will be exceeded. So to the extent of this outstanding amount, an ad hoc facility will be granted by the bank. This is the position. What will be the rate of interest of such a funded interest term loan? It will be equal to the existing rate of interest of the parent loan. There will be gold loans where monthly EMI is demanded. Banks may take an approach in line with the normal term loans in the case of gold loans. For gold loans where the nature of payment is by way of bullet repayments, in such cases, the gold loans due during the moratorium period will be demanded immediately after the moratorium period. That is, the same will be demanded on September 1st, 2020. This will be a serious issue in the case of all gold loans. The other features of this moratorium is that the borrower's credit rating will not be impacted in any way. The CIBIL score will not be affected. That is the meaning. The another point is that the extension of loan moratorium will provide relief to those facing difficulties in servicing their loans due to cash flow and income disruptions. The deferment of loan repayments will neither incur penal charges. There will not be any penalty or fine, etc. on this moratorium. One important thing is that interest shall continue to accrue on the outstanding portion of the term loans during this moratorium period. Hence, those with sufficient liquidity to service their existing loans, it is my opinion that they should continue to make repayments as per their original repayment schedule. It is just like a temporary deferral of loan payments, not a waiver. The RBI's loan moratorium was only permission given to lending institutions to grant the moratorium. So, it is not a mandatory thing that every borrower has to accept that. He can option either accept or not to accept that. The next point is that who can avail this moratorium? It is applicable to all standard loans. That means all the loans which are standard. It is not available to a non-performing account. If your loan is a non-performing on March 1st, 2020, it is not eligible for this moratorium. Only standard accounts are eligible for this moratorium benefit announced by RBI. So there is an exception that bad loans marked as bad as on March 2020 will be excluded. Recently, in a response filed by RBI with the Supreme Court in connection with a petition seeking a waiver of the moratorium period interest, it cautioned that a waiver could impact the banks by as much as 2 lakh crores, almost 1% of the GDP of India. What will happen if no extension is announced after August 2020? There are 3 situations. 1. Not availed the moratorium. Nothing changes. It is status quo because they are already paying. Next, availed the moratorium and are in genuine financial stress. You may speak to the bank to look at loan restructuring to ease the financial crunch. The third scenario, availed the moratorium but can repay the loans. In this situation, it is better to consider an immediate one-time settlement by payoff of accumulated moratorium interest, including interest on interest. Otherwise, due to the multiplier effect, if the moratorium period interest is not paid off, once the moratorium ends, it could significantly push the interest cost of capital. Hence, instead of adjusting the EMIs or loan tenor, it is advisable to settle the moratorium period interest immediately. RBI moratorium on repaying loans should not be extended. These are some of the news recently. The Punjab National Bank said that the moratorium on repaying loans till August 31st, as announced by the Reserve Bank of India, should not be extended. Why they are saying like that? They are saying that there are green shoots are emerging in the economy. Similar views were recently expressed by leading bankers like HDFC Chairman Deepak Parekh, SBI Chairman Rajnish Kumar, and CII President Uday Kotak. What is the response of RBI Governor? He said that bank moratorium was a temporary solution to the lockdown stress, justifying the decision to go in for moratorium which ends on August 31st. RBI Governor said that RBI has formed COVID-19 related resolution framework after taking into consideration financial health of banks as well as depositors. And the RBI will introduce a COVID-19 restructuring package for the benefit of borrowers, whereby the interest element which they have suffered during this moratorium period will not have any impact on this by extending the period of loans.